thought we underperformed as a desk relative to the opportunity set with the recent spike in volatility. There is a general principle that increased volatility brings larger P&L for traders. So why do we underperform? Well, most on the desk have learned to outperform in a low volatility market. And I've written that 2017 was a year where we dramatically outperformed our peers. Traders have developed a playbook, their trading business, that does well when volatility is compressed. Also, with enhanced volatility, the opportunity was in the hardest products to trade intraday. Some of you certainly know as traders, SPY, Qs, UVXY, VXX, and SPY is probably the hardest out of all of them. So we were challenged to transition trading style and do so in the most difficult intraday products. Further, we mostly traded market products for trades to hold, what we call trades to hold, intraday swing trades for lack of a better expression. We expressed those positions in stocks and options. There were moments when we were very long the market and holding, very bullish and holding. The intraday and medium-term market was trending upwards, and many were sitting with significant open P&L. And then headlines hit the tape that disrupted intraday trends. Syria, trade wars, the Trump investigation. Traders were stopped out of their long positions with these steep drops after these headlines hit the tape. These headlines were consequently absorbed, and then a new uptrend resumed. But traders had been shaken out of some, or all, or most of their long positions, or their short volatility holdings. Said better, the tape paid move-to-move market trading, and we were trade-to-hold trading. Having said all that, we should have done better as a desk. We communicated that to our traders. We should have adapted quicker to the opportunity set, and our job certainly as active traders is to trade what works in the present market conditions. No excuses. Now we entered a period where volatility has compressed, and we enter earnings season. So we're going to wade back into stocks in play because of this. So my sense is while this experience was frustrating for traders and we underperformed, our desk improved dramatically. I saw traders on the desk structure trades with much more sophistication that will pay dividends. I saw traders better able to trade the overall market, using effective indicators for marketplace and even building new tools to make trade decisions at a higher level. I saw traders size up in marketplace, handling more risk responsibly outside their core trading strategies, which is going to allow them to trade bigger overall. I predict, and you can hold me to this trading experience will spark higher profitability and high beta and large caps during this earnings season. I predict this experience is going to spark tremendous improvement by firm traders. This is what we're seeing from our desk. I hope that helps. Trade well.